What is up, Central New York? It's me, Bob Jokel with Hunt Real Estate, and it's time for the monthly housing market report. But the question I have is, when is this housing market going to change? It's been pretty much the same for 3 years now. It's the same pattern. When's it going to change? Is it going to change? And there's a few things that are coming into play this fall that actually may have an influence on the market. So we're going to take a look at the numbers from August, and we're going to talk about some of the things that are in play that may actually move the market a little bit, and that's going to be important. So let's take a look at the numbers and we'll go from there. New listings for the month of August, month to date, we're down 3.1%, 465 versus 480. Not a big difference when you look at the raw numbers. Percent-wise, it looks like a little bit of a bump down, but really no big deal. Now, year to date, new listings were up 3.2%, 3,311 new listings versus 3,207 new listings. So for the year, new listings are up a little bit. Not a heck of a lot, but getting there, okay? And that's important. We need more listings. Now, remember the last couple of months we were looking at where the homes are, most of the homes are priced. What's the price range where most homes are priced? And that's really important, and you'll see why as we move forward. But for the month of August, 49.4% of the new listings were priced between $150,000 and $300,000. Now, pending sales, which are homes that are under contract, waiting to close, were down for the month 14.8%, 306 versus 359. Okay, so less homes went under contract, even though the listings were up a little bit. Don't know why. Usually August is a little bit of a slow month, but you know, this is a little bit slower than normal. Now let's look at the percentage, where the contracts were written, what price range the contracts were written in. 51.2% of the new purchase contracts in August in Central New York were homes that were priced between $150,000 and $300,000. So now you see how that correlates to the new listings, and so that's where most of the buyers are. Most of the buyers are in a price range between $150,000 and $300,000. Closed sales month to date were down 14.9%, 370 versus 435. That's fairly significant, okay? So that means that fewer homes were sold in May and June, okay, because those are the ones that would have closed in August. Now, year to date, closed sales are down 2.3%, 2,359 closed sales versus 2,414 closed sales. So again, down a little bit. And again, a lot of that has to do with inventory, and a lot of it has to do with, where buyers are at in their minds, because it's been a tough couple of years for buyers. Days on the market until sale for the month was down 14.3%, which sounds like a lot, but it was 12 days on the market versus 14 days on the market. So we're looking at 2 days, not a big deal. Year to date, it's flat, 19 days on the market versus 19 days on the market. So, we're in that pattern. However, again, let's look at where the homes were priced and how long they stay on the market. Homes priced between $150,000 and $300,000, the average days on the market for them was 13 days. Okay, so less than the average for all price ranges. And for homes priced $400,000 and higher, the average was 36 days on the market. So 3 times the number of days for the higher priced homes versus the homes where most buyers are. Now, having said all of that, the prices continue to go up. So the median sale price, and this is important, remember what we said about where most of the homes are priced and where most of the homes are being purchased. The median sale price for the month of August was up 9.3% from last August, $295,000 versus $270,000. And year to date, the median sale price is up 10.2%, $270,000 versus $245,000. So again, we're still seeing a significant increase in the price of homes, and the median sale price is really where you want to look, because again, that's where most of the homes are being sold, and that's a better indicator of what's going on in the market. The average sale price for August of this year versus August of last year was up 15.7%, $368,472 versus $318,471. And year to date, the average sale price was up 12.9%, $331,039 versus $293,302. So again, you can see a significant increase. For the month, it was $50,000. That's an amazing increase. Now, a lot of that has to do with new construction. A lot of the new construction sales have closed in July and August, and will close in September. And that's based on when they went under contract and when the homes were finally finished. And new construction is much more expensive than resale homes for the most part, if you're looking at dollars per square foot. So that's why the average sale price seems to be so much higher than last year. When it comes to new construction, the price of materials continues to go up, and the price of labor continues to go up, and the price of land continues to go up. So it all contributes to that amazing increase in the average sale price. Now, the percent of list price received, which is the ratio between the list price, the asking price, and the price that was paid for the home, for the month of August versus last August was down 1.6%, 105.6% versus 107.3%. It's still, homes are still selling for above full asking price. 5.6% above full asking price in this month of August, past month of August. For the year, it's down 1.1%, 104.6% versus 105.8%. So again, homes, for the most part, are selling for above full asking price, and the only time that happens is when we have multiple offers, right? Otherwise, there'd be no reason to offer more than what the list price is. So again, we're right back in that pattern where there's still more buyers out there than there are homes for them. So, buyer demand exceeds the supply, which causes prices to go up. You get multiple offers, and people are offering, have to offer more than full asking price in order to sell the house. The inventory of homes for sale, that's the total number of homes that are on the market, was up 29.5%, 659 versus 509. So that's 150 more homes in inventory at this point. So you look at the number of new listings that were down for the month, but a significant increase in inventory. Well, why is that? Well, higher priced homes are staying on the market longer. Homes that were on the market and maybe the sale fell through for one reason or another, they come back on the market, they come back into inventory, they don't come in as new listings. Month supply of inventory, now that is how long would it take under the current market conditions to sell all of the inventory that's out there, all the existing inventory. And that was up 31.3%, 2.1 months worth of inventory versus 1.6. So, it sounds like a lot, but it's still a seller's market. And, the normal balanced market is 4 to 6 months worth of inventory. A buyer's market is more than 6 months worth of inventory, and a seller's market is less than 4 months of inventory. That's where we are, that's where we've been. something very important, the Housing Affordability Index. Now, the Housing Affordability Index measures what the affordability of a median-priced home is for buyers that are in a household with a median income for the area. Okay, and the Housing Affordability Index continues to go down, which means that homes are still becoming less affordable for people at the median income. The homes are increasing in price faster than the incomes are increasing for the median household in the area. So the Housing Affordability Index for the month was down 9.3%. Year to date, down 11%. And for the last 3 years in a row, it's been declining. So in 2024, in 2023, it was 22.4% down. In 2024, it was down 2.7%. And for 2025, it's down 11%. All of this stuff is important. And when we look at the list price per square foot, this is what homes are selling for per square foot. And again, this takes into account resale homes and new construction. For August 2025, it was $189 per square foot on average. For August 2023, it was $172 per square foot on average. And for August of 2022, it was $157 per square foot on average. And it started out this year at $169 per square foot. So again, the price of homes are going up. So what's going to make a change to the market? Well, mortgage interest rates have come down a little bit. So what that means is that it's more affordable for buyers to borrow more money, okay, because they're paying a lower interest rate. That could have an effect on the market going forward because it may bring buyers into the market that weren't in the market before, and now they're coming into the market, so it can increase the number of buyers. But at the same time, they're not down a lot. They're down maybe 0.25% to 0.5%, depending on your credit score, depending on the program you choose, conventional 30-year, conventional 15-year, FHA, VA, depending on the product that you're looking at, that's going to depend on the interest rate. So if you're, when you're buying a home, you're in the market buying a home, even if you've got a pre-approval letter from your lender, go back and see if you can afford more now because the interest rates went down. And if you're borrowing with a local lender or a national lender, you should really get a second look. Hunt Mortgage is a great mortgage company. We have mortgage consultants in all of our branches, and they'll do a second look for you and see if they can get you in a better product or the product that's best for you and save you money. So it doesn't cost you anything to do that. I would encourage you to do that. And let's keep our eye on interest rates moving forward because the Fed is talking about lowering interest rate. Some so-called experts think it'll be 0.25%. That doesn't necessarily mean it's going to affect mortgage rates, but it might. So we've got to keep an eye on interest rates. As always, if you're thinking about buying or selling a home, please reach out to me. You need an experienced agent that's going to help you get to where you want to be, whether you're buying or selling a home. So let me be your partner. Other than that, I hope you're having a great day. I hope to hear from you, and enjoy the rest of September because, as we know, once the fall sets in, all bets are off. Have a great day. Till next month.